glad you're here. I'm going to show you a few things that are going on right now, some of which you may have heard about. And I'm going to tell you about a webinar that I'm doing tomorrow. I don't know if you already have the information about it, but you're going to want to know. So don't leave without hearing about the event tomorrow night and the research, yes, hard research that I'll be sharing about moving averages. So the big news in the market that affects both Forex and stock traders is the U.S. inflation numbers and the expectation for inflation. So it's one thing that the U.S. Bureau of Labor and Statistics reports that inflation came in higher than expected, but it's another that down in the details, you can discover that it is a lot worse than being described by these simple numbers. If you go and look on Forex Factory back in last week, let's see, I think yes, it was the 13th of February. Let me share my screen and I'll show you this to you. Yeah, okay, so hopefully you can see this now. On Forex Factory, back on February 13th, you see the core CPI month over month, the CPI month over month, and the CPI year over year. Now, the year over year doesn't look so bad. The forecast was that it was going to be 2.9%, that it had gone from 3.4 and was going to drop down to 2.9. All right, that's the expectation, that we will see a measurable decrease in inflationary movement. 3.4 to 2.9 annual. 2.9, we're almost getting back to what consumers have been used to in the U.S. for the longest time. But instead of getting to 2.9, it came in at 3.1. Well, 3.1 doesn't sound too bad, especially since we were 3.4 before, and so it's dropping. But the month over month was from 0.2 to 0.3, and the core CPI was from 0.3 to 0.4. All right. Now, the fact that it went the opposite direction from forecast, and more importantly, for those who actually dug into the details, they found that it was so much worse than expected. And that is what caused the U.S. markets to just drop. Now look at the reaction to this. We go back to February 13, right here, this day. And these three charts are gold, the US dollar compared to the euro dollar, that's the green line, and Bitcoin, which is the candlestick chart. So here you can see that the green line and the yellow line, they tend to move in mirror opposites, right? And that makes sense because you buy gold with dollars, right? So if the dollar becomes less valuable, then it takes more of them to be able to buy gold, meaning gold gets more expensive. If the dollar becomes more valuable, then gold becomes less expensive comparatively. So it's absolutely natural that you would expect these two to have this sort of inverse correlation, this inverse correlated relationship. But Bitcoin, what's Bitcoin, right? Bitcoin is something that the value of which is still being, debated on. But at $50,000 Bitcoin after it's all this time, it's hard to, the debate is it's valuable. Why is it valuable? Why is it that valuable? That's what the debate's left about, right? But here, we can see something really important. The dollar starts dropping down after that day. So that's really interesting. Inflation is high, and on the first day, the first reaction to that is that the dollar goes springing up. Why is that? Well, it's because if inflation is high, the US Fed will not cut their rates. And everybody was hoping that they would cut their rates at some time in the next few months. But even if they do, it's going to take a while. That's what the market decided on this day. And then notice that what happened was the dollar went rushing up and gold went rushing, just dropping dramatically. And since then, it's been an opposite reaction. The dollar has been falling and gold has been on the rise. Bitcoin had one big day of rise. Well, let's see. Yeah. One big day, the day after, not the immediate reaction, but the next day after that. And then it's kind of held at this new level above 50,000. So I don't know that Bitcoin is a strict reaction to inflation numbers. And it certainly isn't the case that the Bitcoin is a clear hedge against inflation. Unless, of course, you look back here and realize that this entire run may have been in anticipation that the CPI numbers were going to be high. And so that's a really interesting thing to contemplate. Bitcoin's movement there probably has more to do with the fact that it's just been on a tear. It's doubled in price over the past 6 months. It has more to do with just it's a strong uptrend than it does a specific inflation expectation. Because if so, then you'd see a greater correlation to these other two. But that being said, now we need to pay closer attention to what is going on with stocks. So here we see the S&P 500 now in the candlestick, and you can see it's also having a strong uptrend. Huge drop on the day that the announcement came out about inflation, but it went right back up, exceeded its high, and then sold off yesterday in front of the 3-day weekend. There's a market holiday on Monday in the US, and so a lot of traders didn't want to have themselves stuck in a 3-day overnight position. And we're still, even with that little bit of sell-off, we're still back up close to these all-time highs. So it's kind of an amazing thing. It's like people got spooked about this inflation number, but they shrugged it off instantly. And so now you have to ask yourself, which way is the market going to go from here, right? And I think that a better clue, rather than just looking at the S&P 500, is to use this ticker symbol IWM. This is for small cap stocks. Small cap stocks rely on low inflation or low interest rates in order to be able to grow because they have to borrow money a lot. And if they're borrowing at higher interest rates, they have a harder time making money. And so this is really a good thing. This, compared to the US dollar, is really a good thing to keep an eye on if, in fact, you want to be able to see where inflation is going to go next. Notice that this one, the IWM, didn't just get back to the old high. It strongly exceeded the high, reaching to a previous all-time high made right at the end of the year. And, it sold off a little too. But, it opened here, ran up, and then ran back down. So its sell-off wasn't quite as strong. In both of those two actions here, what I'm seeing is investors that are willing to take risks, that are looking for the big hit. They are putting money in, and they're not super afraid of letting it run. Otherwise, they would have sold out even more strongly over the weekend or in front of the weekend, but they didn't. So the big question here is the Russell 2000 going to get up and make a new all-time high? And if so, will it continue after that? Because if it does, then what you're going to see in currencies is that the US dollar is going to reverse this 2 month long uptrend that it's been on and start into a downtrend, which of course means that the Euro USD would trend higher, the Aussie USD would trend higher, the pound dollar would trend higher, and so forth. All U.S. dollar denominated pairs would rise because the U.S. dollar would be falling. And so this is an important thing to keep an eye on. There's all kinds of great trades that are going to happen in the Forex market if, in fact, the IWM and these interest rate sensitive stocks break out and head higher. Now, it's also true that stocks are going, they're showing us, investors are showing us, hey, if inflation happens, I'm keeping my money in the market. I'm not going to move to the bond market or something like that. I've got to keep my money in stocks because it's the only place I can go to have an expectation of outpacing inflation. And inflation, a little bit of inflation, it's not too bad. But you retire at age 65 or something, and you've got 20 years left in your life, and you've got whatever built up savings. You can't afford to have that savings be chopped away 5% a month, or sorry, 5% a year over the course of 20 years. You're going to run out of money before you die. And that's the way people are worried. They're like, oh well, I'm gonna have to keep that money growing. Therefore, I'm going to keep that money in stocks. And that whole dynamic of what is going to happen with inflation is, used to be sort of a sideshow for investors. Now it is front and center. It is the main thing that people are concerned about, investors are concerned about. And so it really is worth keeping an eye on this chart right here, the dollar and the IWM, the Russell 2000. If this thing goes higher, the dollar will likely move lower. I mean, you can see how this, let me go ahead and get rid of the gold chart. So, a lot of people have the idea gold is a great hedge against inflation. If you get runaway inflation, you get runaway gold prices. I hope you see that doesn't appear to be the case right now, this time around. That's because interest rates are part of the mix. If, in fact, interest rates are not part of the mix, if interest rates aren't changing, and all of a sudden you get runaway inflation, yes, then you get gold prices running up. But starting in 2002, when the Fed started ratcheting up interest rates in the U.S. Higher and higher, then gold is not the issue anymore. Because at higher and higher interest rates, the dollar is more and more attractive. And if the dollar goes higher, well, the price of gold goes lower. And that's the dynamic you've got going on. So right now, it's all about the expectation. What does the market think the Fed is going to do? The dollar is acting as a prediction mechanism about what investors think the Fed is going to do next. If, in fact, the Fed is not going to reduce rates, if, in fact, they might even have to raise them sometime this year, all of that would keep the dollar attractive, would keep it on the rise. And if, in fact, that happens, then we should see small cap stocks struggle against this resistance and not be able to create a breakout and new uptrend, but stay in this sort of sideways channel. If, in fact, the investors think that the Fed will eventually end up cutting rates even a little bit, then the dollar will shrink, and the Russell 2000 will continue to grow, along with other U.S. stocks. So here's a big red letter day for investors to pay attention to, and that is March 13th. That's the next day that the CPI will be coming out, or is it? Is it March 12th? March 12th. I missed it by a day. Tuesday, March 12th, we do it all again. The U.S. Bureau of Labor and Statistics will report the core CPI and month over month and year over year numbers. And then it will be followed a couple of days later by the PPI and the retail sales number. So that week, there won't be much in the way of earnings, but there will be a lot in the way of inflation news. So the second week in March, those are the days coming right into the Bali retreat. So you want to be paying close attention to that. I'm excited about that because what that means is the days following the Bali retreat are going to be a reaction. They're going to be reactionary. So those 2 days will have lit off, and the market will have done whatever it's going to do. Maybe it's going to make an up move, and then we might get a corresponding downward move over the days that follow, or vice versa. We might see it go down and then be going up for stocks. But I think what that means is we're going to see some really good trading the week of the Bali retreat. And of course, for those of you who know, at Bali, we have a room full of traders along with the students who are always calling out trades over the course. Paul will say, "Hey, what are you seeing? Anybody got trades they want to tell us about?" And some of these trades will be hourly or 4-hourly chart, or daily charts. Some of them will be on, most of them will be on Forex, but there'll be a few people like me who might give out a stock trade idea, and I do both. I try to throw my hand in with the Forex trading as well, but there are so many good traders there that have great Forex ideas. I concentrate on bringing stock ideas. Now, I made a quick reference to a webinar that I'm doing tomorrow on proper use of moving averages, and I have done my own back testing and research about moving averages, and the first thing is you're going to want to know is, do moving averages work? And the answer to that is yes. I mean, there's been a lot of research to say they work. The question isn't whether or not they work. The question is, how do they work, right? Because if you trade them properly, they work well, and if you trade them improperly, well, you lose money. But I've also come across this academic research article, which talks about the moving average distance, the distance between moving averages, as a predictor of stock market returns, stock trading returns. I'm going to take the extra position that you can translate those stock market predictions into Forex market indications as well, sort of an intermarket analysis thing. So I'm going to tell you about what this research says, and then show you an indicator that corresponds with this research that I've used over the years with the U.S. stock market, that also has the ability to translate into Forex trades. So that is tomorrow at I'm not quite sure the timing. Sam, if you have information and a link about that you could post into chat, that I would be appreciative. Yeah, I believe it is. I don't believe it's a paid webinar. I think it is. And this access here, I will share with you the link. It is publicly available at the webinar. I will share that link with folks. And so hopefully we can, it is free to join. Hopefully we can get that information out to you. Links will be posted into the respective Telegram chats. Okay, so watch your Telegram channels for the webinar that I'm doing tomorrow night about moving averages. And And if you're able to come to it or see the recording, then you'll see where I show where the link is and that it's publicly available. So this and a couple other papers too, but this one is unique because it's talking about their own research. Okay, I want to talk specifically about individual stocks that are in play right now that might be really interesting to watch between now and March 12th, the next time we get some information on inflation. Okay, first off, this is the S&P 500. It's had this fantastic run since the the end of October, beginning of November, sort of right in there. And what that means is that if the average of stocks has been going up, then there are a lot of stocks that have been going up more than the average. And what are those stocks? Which ones are moving average, are moving greater than average? Because those ones are going to tend to keep moving higher than average. Notice that although we had a down day, if you sort these are the stocks that I have on my watch list here that have liquid options, and kind of the main growth or not necessarily growth, but influential stocks in the market. And if you look at this list, this is yesterday's performance, just single day performance. And what have these stocks done on a day when the market was dropping, right? Well, this one right here, NVIDIA, although it was dropped barely, just less than 1%, less than 1/10 of 1%. So I mean, this, it's had 2 down days. That looks bad, right? Look at that huge, strong trend since then. It's a $700 stock now, whereas just a few months ago, it was only a $400 stock, right? Now, it sounds like a lot, but just move the decimal point. It's like a $40 stock that went to 70. You just buy 1/10 of shares and you're getting the same performance. But if that's, too expensive, well, the next one down the list, Amazon, right? Amazon has had a strong move, and it had this big jump, which it had, this gap hasn't given back on, right? If in fact U.S. stocks are going to continue, this one is likely to outperform and keep going higher. Verizon is not so much. Verizon, you see, has had this sort of downward move, having trouble getting going again. The inflation numbers didn't do anything to help it. I mean, the next move for Verizon is probably down. Tesla, huge down move, but it's kind of doing the opposite. It's struggling, but a couple of days, last 3 days, look at that, big moves up, and not too much of a move backwards. And then you have SPY, and everything else went down more. So just those ones there, NVIDIA, Amazon, Verizon, and Verizon doesn't even count. It doesn't move that much. So NVIDIA, Amazon, and Tesla, those are the three. Those are the three that if in fact we do see the market continue to make new highs and continue its upward trend, those are three that are going to be the leaders over the next month: NVIDIA, Amazon, and Tesla. So so keep an eye on those three. Let's see what else. AMD and Netflix. All right. So NVIDIA has a lot to do with Bitcoin. I showed you that Bitcoin chart. There's another reason why. I mean, you look at this move here, and doesn't that remind you of the Bitcoin move or something? It's actually even bigger than the Bitcoin move. But the NVIDIA chips are the ones that run the graphics processors, which if you're doing Bitcoin mining, you really need those. And that turns out to be a high in demand chip in the world of cryptocurrency mining. And So off and away it goes. AMD and Intel also create chips, right? So what's been going on with Intel? Intel had an upward trend months ago, but has shrugged that off. Yikes. AMD had a good move, but it's tapered off. So Nvidia is now on its own in terms of benefiting from the Bitcoin move. If in fact the market goes south, the ones that are most vulnerable, in my opinion, are going to be this one, AMD and Intel, which already has the start of a downward trend. But anything that Bitcoin was maybe going to be, helping chip makers with, keeping investors interested, is if in fact Bitcoin stops going up or the market stops going up, these are the ones that have already shown that they're vulnerable to investors. So these ones will start going down, start leading the way to the downside, both Intel and AMD. So if you're somebody who likes to do options or CFDs, doing a put option or selling, a CFD, selling this with the anticipation of these prices are going down, that's Intel and AMD are the ones that you'd want to keep an eye on. Now, if you don't do individual stocks, you just do indexes. Well, the Nasdaq 100, if Intel and AMD start dropping, then Nasdaq will start dropping. And notice that unlike the S&P 500 or IWM, the Nasdaq did not get back up to its old highs after the inflation thing. So again, there's some vulnerability there. If in fact we were to see the US dollar continue its strength, we would see this thing, the NASDAQ, potentially lose its upward trend. Another way to say that is if in fact you see the NASDAQ begin to lose its trend, the NASDAQ 100 index, if it loses its upward trend, we'll probably see the US dollar continue its upward trend, which of course means, lots of Forex signals. All right, so that is the total mix. We just got a couple of minutes for questions if you have any, but the market update is we are on inflation watch for the next month. That's going to be driving the U.S. stock market, and hopefully I gave you some ideas of stocks to work with, to play those. What'll be strong, what'll be weak, and so forth. Until next time, everyone, take care and trade well.